Okay, everybody, it's Kevin Wadsworth here from NorthStarBadCharts.com again, and with Patrick Karim as per usual. And we've got a great guest with us today for you to enjoy. It's Kasper Ramussen. Have I pronounced that right, Kasper?
Rasmussen, yeah, Rasmussen.
Okay, well, it's great to have you with us, Kasper. You're perhaps better known on Twitter at UseLinkInv, and like me and Patrick, you're really into your technical chart analysis, I believe. So myself and Patrick are going to pin our ears back and listen to what you have to say through your charts. So yeah, go for it.
Yeah, sure. I assume the sharing of the screen is good now.
Yeah, we can both see the screen good, and you can see your charts and your annotations. So
well, yeah, I remember. Well, that's why I reached out to Kasper, because I saw the silver to M2 chart, and it's so funny because when I see people do some charts without whatever it is, whatever the ticker is, we've seen so many charts, Kevin. I don't know if it happens to you or Kasper. Somebody shows a chart, a ratio chart, and I say, man, that chart, it looks like just this other chart that has nothing to do with that chart. And then it's just, I'm like, then you know that technical analysis is fractals, it repeats, it gives you an edge. And then you start finding links like, am I the only one that happens
no,
to you?
The very same thing just happened to me this afternoon. I was looking at the gold chart, and then a few minutes later I looked at the chart for Bitcoin, not Bitcoin, the cryptocurrency total market cap. And I almost fell off my chair when I saw the cryptocurrency total market cap chart. Looked remarkably like the gold chart as well. So it's, yeah, you see these patterns playing out time and time again, even in instruments that you would have thought probably technical analysis might not be so applicable to. But yeah, it's amazing how it works.
All right, what do we see here, Kasper? Sorry.
Yeah, well, this is actually a chart where I got the inspiration from you, Patrick. I think at one point you mentioned something with the dollar, where you take into account the inflation. And then I started to look into if what we're seeing right now is the same as we saw back in the 1970s, where we know the inflation was very high for like 10 years or so.
Yeah.
And then I actually kind of quickly found, this piece here. So not the 70s, the 90s, before we had the big gains in gold and silver. And then I tried to look at it in this way. We had this breakdown here, 2002, and that was just a bit after we had the where the gold and silver started to go back up again after the big bear market. And then I tried to see if there were some familiar things compared to what we are seeing right now, because as you know here, this is the dot-com bubble is right here, more or less, 2001. And here we had the big, let's say, it's not a blow off, but we had the COVID crisis hit here. And when I did this chart, I was looking very much into different fractals on different instruments. And then I tried to see if what we're seeing, maybe I should zoom in a bit here. Oops, my screen here is getting. Yeah. Now we're on the daily chart, and then I wanted to see if what we're seeing right here, these breakdowns here, if they were similar to what we are seeing right now, 20 years later, more or less. And what I noted rather quickly is that if we see this breakdown here, we break down, backtest many times, and then we start to get these lockstep down. And if we zoom ahead to the present here, as we can see here, we start to break down. So this was the first wave, and then we back tested it, and then we start to see these lock steps down. And what I have done here is actually I took the fractal of the third wave to see how that would fit in with this wave that we're currently in right now. So what I'm looking at here is that that the third wave we had back like 20 years ago is more or less identical of what we're seeing right now here. As you can see, the yellow one is the third fractal from 20 years ago, and then we have the current price action as we see.
Wow.
That's
So if
quite striking, that, isn't it? Yeah.
yeah, so if this is to play out again, then we, the next month or two, January, February, we should start to see this ratio go down here. And we should remember that even though we are looking at the dollar, when we take into account the inflation, the dollar in this period can go up. But if the inflation is getting higher and higher, as we see right now for the past, I don't know, 3 months, then this could easily, start to move down, even though the dollar is going up. And that is also what we saw back then, is that we had periods where the dollar went up and up and up, but actually this ratio went down, and that's where gold and silver particularly started to perform really well, even though the the dollar was going up.
Yeah, I think people forget that quite a lot, don't they? Is that there are periods where the dollar index rises, but gold rises at the same time. It isn't a perfect inverse relationship, and something like this, I think it does illustrate, and Patrick's mentioned it, is that the US dollar index adjusted for inflation is what's more important. If inflation is 0, then of course it doesn't make any difference. But how often does inflation stay at 0, and for how long? Of course, over time, it's inflation is eating away at it.
Yeah, I have two. I've done this ratio, but on quarterly charts. So it's super fun seeing that on the daily chart, that granularity of the resemblance in that fractal happening over again there. That's super, like, Jesus, I'm getting shivers. And like, I'm wondering, do you consider, are you like, as a chart trader, do you like having narratives and then trying to see if those exist in the charts, or you're agnostic to all this, like all these, let's say, manipulation and all these stories? Like, how do you incorporate that stuff, Kasper, in the way, like, when you approach chart trading?
Yeah, if I go back, 1.5 years ago, I would be very biased, I think, because at that point I got heavy into gold and silver just before the summer of 2020. And I thought, man, this, gold at that time, gold and silver all went up and up and up and up. And I thought, wow, this can never go down again, right? I was like heavily biased at that point. So a lot of the stuff that I posted back then, is very biased towards that gold and silver is the only way to go right now. And as we know, 1.5 years later, gold and silver is still, consolidating. So so that is something that I have learned, is to always look at, both sides of the coin, actually, and be more open-minded. And also back then I tried to, I don't think I did it on purpose, but I think I had the charts fit to what I wanted to believe, So if my narrative was that gold was supposed to go up, and that was my belief at that time, I tried to adjust, the charts, so that they would look more bullish than actually it was. So I think over the past 1.5 years, I have tried to see both sides of the coin and do it in different ways. Like this chart, for example, I would never have looked at the Dixie divided by the inflation if it wasn't for Patrick. And this actually, when I noted this, and I remembered it. It was late at the night when I saw this, and I could feel my my emotions getting a bit intense, because if this plays out as maybe it will, then for the next 5 years or so for gold and silver, we are in for one of the biggest move you will have in a long time.
Yeah.
So
I mean, that whole key, and what's key to this, I think, is you're looking at pieces of a jigsaw puzzle and putting the pieces together. If you look at the producer price index, which has had only its 3rd sort of historic type breakout in the last 100 years, the producer price index is locked in inflation. That's going to get passed on to consumers, and that's going to fuel inflation. So there's some very good reasons to believe that inflation isn't transitory, and that inflation is something that's going to be around for years to come. And that kind of inflationary environment is exactly what allows the US dollar to rise if it wants to. Yeah. But for gold, or perhaps I should say more correctly, the US dollar index to rise, whilst gold also rises. And so gold can very easily outperform the dollar index courtesy of inflation. If inflation is running at 15%, then that is going to completely eat up any sort of small 3-4% rise in the US dollar index. So it's all relative. Everything is relative. It's all relative in ratios. If you're taking outright numbers, it might look good or bad, but you have to set it in the context of what everything else is doing.
True.
So really, really important.
Yeah, exactly. And that's also, if I can go on to the next chart, if I can, if I can find it.
That's pretty cool seeing that on the daily chart, Kevin. Because I wanted to, I didn't,
sorry.
Yeah. I didn't know the CPI AUSCL, it was updated daily.
No, me neither.
It is,
but,
right?
Yeah, it is. But I think every month we get the new number for the CPI.
Okay, so the fluctuation is the DXY, right? So
yeah, exactly. What the dollar goes up and down the day, that's what you will see here. And then every month or whatever, whenever it is, the new print from the CPI gets in, and then that will have an effect as well on the chart. So I wanted to find, yeah, here it is. When we talk about inflation, that's also a chart I have brought up, many times, which is, in my view, very scary actually. This is 100 years of inflation. And then of course we have, just gonna adjust it here a bit. 1 second. Yeah, then we have the World War I, II, and then 90s, 80s, where we know we had a very high inflation, and now we are here. And no matter what chart you look at, if you break a line like this, the red line, then we are more than often going to get a break, back test, and a resumption, right? So if this happens, in my view, then we could easily see 15% inflation again. And that would fit well with the other chart that I showed you, where the dollar can rise. But if you have 15% inflation, that doesn't do well for the dollar. So
what I mean, Patrick knows I've been posting on this for a while, very similar charts, and inflation, PPI, CPI, and just how important these tests are going to be when this graph hits that red line.
Yeah.
I don't know what your thoughts are on this, but my feeling is that we may hit that resistance line and form some kind of bullish consolidation just underneath it, pull back a little bit. And one of my reasons for thinking that is that we have, well, gold is cyclical, as we know, and it has an 8-year cycle. 2000, 2008, 2016, you can go back to 1992 and further back, and since we came off the gold standard. And the next cycle low is due around about 2024. And I just wonder if we're going to hit that line there with rising inflation and then just pull back for a while and form a bullish consolidation before a really huge breakout as soon as gold has put in its 8-year cycle low. I'm just trying to put pieces of a jigsaw puzzle together. I don't know if you've had any thoughts on that, but if we bust through this now, then it's going to be pretty scary, and we come back for that back test, as you say, and we could see the gold cyclical low on the back test, which would also make a lot of sense. So we bust through, things get really scary, back test. Maybe a lot of that has got to do with what exactly is going on in the big wide world with COVID lockdowns, which are coming back, across Europe at the moment. That's going to play into it as well.
That's what I want to ask. So to circle back, Kevin, he gets these elements, like let's say COVID or whatever. Do you use that type of information that's outside of the charts to probably help support the narrative case of it?
Yeah.
You do? So do you consider, let's say, COVID into, oh man, are we going to get less views because I said the word COVID, Kevin? I'm scared. Are we going to get blacklisted?
I'm keeping away from the politics of all of that and trying to just stick to the technicals and the fundamentals tie together. It's a chicken and egg thing, isn't it?
So if you could just tell me, do you consider non-chart?
To some degree, but actually 1.5 years ago, maybe more, maybe 3. I saw this YouTube channel. Actually, I think you know him, the Market Sniper, and I saw one of his videos, and he said that everything that goes on in the world is you can see in the chart, because everyone is participating in the and so every information that they have, if it's COVID or if it is U.S. elections or Brexit or whatever you have, is painted into the chart.
course,
So
the chart is forward thinking.
yeah, exactly. So so what you see here is taking everything that happens in the world right now into consideration, and so that's how I go by. Yeah.
Was that you putting
Right.
hearts on the screen there, Pat?
I did that.
Very good.
You could, I don't know if it's going to be recorded, but you can, in Teams, if you approve of something, you could go and look, I could do, without interrupting him, I could send a funny face.
Yeah, you could do something like that, yes. Like
I'm
this.
hoping that's recorded, otherwise people are going to wonder what on earth we're talking about.
Yeah.
Yeah, I mean, I completely agree with that. You know, forward charts are forward thinking. They're not just telling you what's happening now. It's telling you what all the market participants are. It's telling you their assessment of the future. So every piece of knowledge that is out there, you know, but that is known by the algorithms, the algos, and the traders, is already being enacted by these charts. The charts are pricing in stuff that is expected to happen in the future already.
Yeah.
I mean, COVID is one of those things, isn't it? That, you know, you could fit a narrative as to why this chart might hit that red line and turn down, or as to why it might bust through it and then backtest it. And I'm sure COVID will play a part in that. You know, real world economics and fundamentals play a part in all of this. But it's my view is that the chart will give the evidence as and when it unfolds quicker than it does anywhere else.
Yeah, exactly.
Jake, I don't know if you guys noticed there what I love just like when you look at that chart, the way inflation has worked in the, like, let's say the cycle from the 1929 all the way to whatever 1945, it's like three impulses. And then in the 70s, you had the 64, you had an impulse, then mid 70s, another one, then 80. So I'm wondering right now, are we just doing the first impulse of inflation? Yeah, those, yes.
Exactly.
Look at that, man. That's insane. That's why you know it's gonna ban, like, look at that.
Brilliant. Yeah, exactly. Thanks for doing that. That's brilliant. Yeah, that's exactly what we were both thinking. Yeah.
That is
and
scary
that's
stuff,
also why I
man.
think, you know, as you mentioned, Patrick, what we get here will be, you know, bust through, and then the back test, or I think we will have, you know, the test, then the consolidation for, like, I don't know, a year, whatever it will be, and then you'll get the bust through, and then you'll make the next high.
Yeah, that's where things really start to go crazy.
Nasty.
Everybody will be. I mean, if we're looking at this chart, you can bet your ass that the Federal Reserve are looking at this chart, and the European Central Bank, and every financial organisation in the world is looking at this chart. And at that point, everybody is going to be rotating out of equities and into commodities, knowing exactly what, and precious metals, knowing exactly what's coming.
Yeah, true. And also, this is now that we look at inflation, right? You know, if already right now, when I go to the local supermarket to buy, you know, what's it called, you know, apples and bread and whatever, you can see it already. I mean, I think the Danish CPI is like 3.2, I think, so not that high. But I can assure you that these numbers are not correct, because, you know, when I look at food, for instance, you know, we have had at least 20% increase in prices, you know, for the last 1.5 years at least.
Yeah,
so
I think that's a story right around the world with government statistics being slightly changed as time goes on to take out the things that are going up in price quickly and replace them with things in the index that are perhaps going down in price, like tech, for example. You know, just because the price of a large television set has come down by 20%, that doesn't really matter, because you don't buy those every day. What really matters is the stuff that you consume every day, the fuel that you put in your vehicle. I'm speaking about fuel. I know Denmark's the same as the UK, with gas and electricity prices going up by hundreds of percent. It's that can't be hidden for too much longer.
No. Also, I think 1 liter of gas or petrol in Denmark is like, what is it? It's almost $2, I think, for 1 liter. So
we're paying.
That's very expensive.
We're paying at least $2 here in the UK as well. It's £1.40, £1.50.
Oh, similar. Okay, yeah.
Which is well over $2, I'm sure.
Yeah.
I wonder if we have.
Go ahead.
Sorry, Kasper.
I was just going to mention, you know, I don't think until we get past this red line here in inflation, I don't think people will start to let's say speak up about it. But I think once we really get going, you know, in like 2 years' time, 1 year's time, then, you know, the common man, like you and I, you know, they will they will get hurt by these increases here.
They will, and I think the PPI chart overlaid with that would be interesting. Actually, the PPI chart, which is just broken out above horizontal resistance for only the third time, I think.
Yeah.
It's locked in. It's almost guaranteed that the inflation will be passed on to the consumer, and that this inflation chart here will eventually break out. Whether it does it on the first attempt or not remains to be seen. But I think its destiny is kind of baked in now.
Yeah. And also, what a lot of people don't really think about is that right now, the American CPI is like almost 6.8. So in order to keep your purchasing power, you need at least that every year, an increased salary. And I know for sure I'm not getting that much of an increase. So every year, my purchasing power is going down, and I'm not the only one. So.
Yeah, and I think if you measured inflation the same way they did back in the 1950s,
you can
50s, 60s, you're probably talking about 12 to 15% inflation, more realistic figure.
Yeah.
Okay, Kev. So when I look at that chart, that's the inflation rate. So let's say we're not calculating the way before. So maybe we're already at the higher TPs. Yeah, maybe like
that does call into question. Yeah, it calls into question the validity of the graph itself. I meant to mention that right at the start. Actually, is that
we were there?
If the graph has been manipulated down, but regardless of that, Pat, I think the fight to keep the apparent inflation below that red line is quite an important one. It's also very important, obviously, that real world inflation is above that red line. But I think from the point of view of the investing world, and those people that just go by, the official figures and statistics, the point of realization will come if and when that breaks out. And that's probably what will spark. It'll spark quite a big reaction around the world, I think, when that breaks out, assuming it does. I know they're going to fight and battle and try and manipulate the numbers as much as they can to keep that graph below the red line, but good luck with that.
Yeah, I agree. Also, if you look at the oil chart, the crude oil, you can see that it is going much higher than it did back in 2014. At some point, it will be a lot higher than that. So, and we know that oil is the biggest component, more or less, to inflation, because you need it everywhere, transportation and so on. So,
Do you have some TA on the oil chart?
I have. It's not
That's
that
easy
big.
for you to say that.
Yeah, I think I have it here. And if you go to the log scale, that's where you get the biggest feeling of it, of how let's say nasty it could get. If you go to the weekly here, I can see I have removed my lines here. But anyways, when I look at this is 25 years of movement, then I like to go to the log scale, because you get a better view of how it looks, because the moves can be so violent. And this is how I see it right now. And,
that's the way I tend to see it as well, actually, like that. Yeah.
Yeah, and then again we have the three impulses, which I always use more or less. If you get this consolidation, you more or less always have three touches to the same line. And of course, in this case, we had the COVID crash. It went to like minus, I don't know, $40 or so per barrel. But it is still marked here as the touch to this lower trend line.
Yeah.
And again, like the old chart before on the inflation, when we break this with full force, we did it here back in October. We broke, and then the back test, it failed. I didn't think it would, because you have this double support right here. So I thought this would hold, and then resume back up.
I wonder if it looks different if you put it onto the quarterly chart.
You read my mind, Kevin.
Yeah. It probably looks like
we have a wick.
So
yeah, okay. Yeah. Okay. Yeah, sure.
So we were hitting quarterly defined resistance, but this is still a super bullish setup there.
It is.
Yeah,
on a quarterly chart, that is a very bullish looking setup, and what's, I suppose, likely from here is some kind of just consolidation below the breakout line.
So in between 57 and where we are now, if we could stay above 57.
You can see here, it goes back to like 15 years or so. We have this 50 Oh, 75, 76, whatever it is. That's a major level to.
It is, yeah. And then the support, I think Patrick was
Right
looking
there. Yeah,
at the
a little lower. I have support.
57, somewhere down near 57.
Casper, move your line
yeah.
down. No, move it up,
Sorry.
Casper. Do that. It's hard, but what I have to mention, your TA, it looks very clean on the black backdrop there. The yellow colors, it really highlights like where to bring the eye. Because I used to do in black, Kevin, my charts, and I was told that it was unreadable, but on Casper's, they look great there. Your choice of colors, it's nice. Yeah, there you go. So you see, that's man, this is. Oh man, I'm getting excited for oil.
Well,
Yeah,
what you've got
exactly.
there with that blue support line underneath, if we bounce around between the yellow resistance and the blue support line, you're going to form a bullish pennant with a
Yeah.
very long flagpole. The flagpole starts at whatever it is, say $20, $18, even a little bit less. But if you take the support line as the bottom of the flagpole, somewhere down near $20, and the top is up near 75, so you're talking about $50 to $55 flagpole.
55, yeah.
Yeah, so 55. Well, where does that take
It's
you
funny. Yeah, of course.
Perfection. I love those targets.
to? Yeah, it takes you to the resistance level, doesn't it? So, that would be technical chart perfection if that was to play out that way. And it's another piece of evidence, another part of the jigsaw puzzle. It helps to just help you kind of paint a roadmap for the future, and you've got a potential bull flag pennant there with that big flagpole, so it gives you a scenario to monitor and keep an eye on. And as time goes by and you build out that little pattern, you can very quickly identify the breakout when it happens. And yeah, of course, if and when it does break out, you zoom right out, because the entire thing is a flag.
Yeah,
So,
it is. Yeah.
yeah, so you got a pole on that flag as well, which goes down to $10 and stops up at the top near about
140-ish.
So
So
you can
have,
add that to your breakout level, and that's your ultimate target.
Yeah.
Yeah.
One thing I've noticed with these commodity charts, look at oil, how it did a huge base up to 2000. It created some type of plateau, and then it rocketed up to another stage. And yeah, there was March Madness. Yeah, so you see that's huge base, and then rockets up. I think wheat did this, or lumber's about to do it, or copper. I think that's what it's going to do. And it's like, and then after that, yeah, it's going to go super up, and then we're going to create maybe for the next 10 years a huge range, but like above 100.
Yeah, above 100 for sure. I agree.
You get these sort of paradigm shifts, I think people sometimes refer to them as, and you have a long period of stability, steady downtrend, and then a breakout, and boom, off you go, and then suddenly everyone's doesn't know what the hell's going on, because they don't, they're not looking at technical chart analysis. But it doesn't come out of the blue. It doesn't come from nowhere. These big paradigm shifts and big earthquakes that go through the financial system, they're not unexpected. They're building over a period of years, and you can identify the exact point at which they begin. I mean, the March Madness there was a very clear shockwave that went through the entire world economy that catapulted the oil price up to where we are now, and puts it in a position to potentially break out again.
And also, the bigger the impulse down, or to the upside, the bigger you get in the other direction, right? Because of the forces you get. So if you get a big down drop here, as you did on oil, you'll get the same reaction to the other side at some point.
Yeah.
And that same, So
it's the old beach ball under the water kind of thing. You see that a lot in the charts, where you get kind of moves up mirroring the what's reverse symmetry. Reverse symmetry moves, you get moves down, and then very often just as quick you get the moves back up again.
Yeah.
Interesting stuff. So have you got any particular thoughts on precious metals, gold, silver?
Yeah. Funny you were going to say that, because regarding this, the bigger the upside, the more the impulse you get to the downside. You will get that at some point also on the gold to silver ratio.
Yeah.
If I'm just going to remove all this Oops, over here. So what you saw here was the, I'm just going to go to the monthly, I guess that's better. Right, here it is. Yeah, just went back to log scale. So this was something, you know, this channel I always have when I look at the gold to silver ratio. And what you saw right here, this is back, you know, again, in the 70s, you get this big, you know, final bust, and then you start to really, you know, move down in the gold to silver ratio. And this is the COVID, you know, crash, whatever you want to call it. And as you can see here, we went from like 80 to, let's say, 125. And again, this move you get here, this you will also get to the downside here. So my predictions, and also if you look at other charts and combine it, then at some point, the way I see it, we will get in this cycle, maybe you know, in like 6 years' time, we'll get single digit gold to silver ratio, because the target, and that's actually, you know, the symmetries again, it's perfect. More or less, the target you'll see here is depending on where you start to do the lines. I'm just gonna get it in here.
Just whilst you're doing that, just for people that are watching and might be sort of thinking about, you know, when we're talking about log scales and linear scales, we've got the log scale on here, which is perhaps a little bit unconventional with a ratio chart, because a ratio chart tends to very often fluctuate within quite a small range. But in the case of the gold and silver ratio chart, you'll notice on the numbers on the right hand side,
it's not logged now.
It's not logged now, but it was.
Not now. It was, yeah.
It was before.
Okay, sorry.
And you can actually view the chart in log or non-log, as long as the numbers on the right hand side move logarithmically. So what I mean is, if the numbers on the right hand scale there start off at less than 10, and then they go to 20, 30, 40, 60, 70, and then they go above 100, you've moved by 2 orders of magnitude. You've gone from, you know, single digits to tens to over 100. So a log scale can be applicable, and particularly if you find that it just works with a technical analysis. And I mean, regardless of whether, you know, what anybody says, if the price behavior is actually reacting on the lines that you're drawing using a log or a non-log scale, then they are valid. If a support line's valid, it's valid, full stop, end of story. You know, and it's given its validity by the price hitting it and using it either as support or resistance, and that's what confirms the line. So you can do that either with log or linear scales.
Yeah, you can.
You kind of see it also in the. Oh, sorry, I keep interrupting. It's so much fun watching somebody else do the charts there.
Yeah.
Yeah,
there's just
the reason why I say that we might get, you know, single digit gold to silver ratio is that, you know, this blow off here, you know, out of this big channel here, will, the way I see it, you know, also be done on the downside here at some point, you know, maybe in 2000 and, I don't know, 26, 7, 8, you'll get this this blow off top to the downside here at some point into single digit.
Wow.
Because, you know, the target right now for this move here, and then we have the back test, is to the lower channel of or the lower support in this parallel channel here. And then at some point, my guess is that you'll get this where we just spill to the bottom, and then we'll go back up very fast. You know, maybe only for a week or a day, but
yeah. So well, that fits in with how silver behaves, doesn't it? Because silver, when you look at its track record, its history,
yeah,
it's a very spiky commodity, and it's never. You know, people sort of say, well, silver's barely made a new high, but if you view it on the quarterly chart, it has. You know, back in the 1980s, that peak was incredibly short-lived.
Yeah, exactly. This is like a week, right?
Yeah, if you go onto if you put the moving average on there, if you were to put the 3-year or even the 1-year moving average on there, it gives a completely different picture. So silver, although yes, it spikes to these very high values, you can't kid yourself that it stays there for very long.
No, exactly.
Yeah.
That's also where I have. I don't have much, but I have some physical, silver and gold. And when we start to get to below 20 on the gold to silver ratio, I'll start to convert my silver into gold.
Yeah.
And I think everyone should do that, because as you can see here, this is only this is a week, right?
Yeah.
So within a week, the price started to fluctuate, 10% on a daily basis, and
Yeah.
then it's
Danger.
over. Yeah, exactly.
Shaking itself apart.
Yeah. Also, the distance, as you mentioned, to the 1-year moving average is absolutely insane, right? So for any commodity or stock or whatever, it's not sustainable. So
yeah, you're stretching the rubber band there, so you can use that distance from moving average, if not in absolute terms, then in percentage terms, work out the percentage distance from the moving average, and you can apply that to wherever we are in.
100% above. Look at that. That moved fast.
Yeah.
Oh
Yeah.
man.
And it snaps back just as quickly. So it's yeah, crazy.
Well, that's why somebody asked me, like I was doing a post on the Gold Express and the Turkish lira, and it's just going parabolic. But eventually these parabolic moves, they crash, and then there's like an echo bubble. Then if you're not able to do a new high, then it's like almost game over there. So in 2012, I don't know, silver wasn't able to do a new high, and yeah, it gets tough.
Yeah.
Turkish lira has been getting. You've been checking, yeah. It's like it's not today. I think it lost 7%. Look at that today, Kevin. It's just melting.
Oh yeah, that's today. Yeah, because last Friday I posted about that this could be the stop, for some time, because you have it log scale here. But I also mentioned that when you have these very high inflation, in this case the Turkish lira, sometimes everything goes off the bed, right? And you get this completely just wash out to the low.
Jesus. Well, there's one of two things going to happen there, isn't there? I mean, the entire system collapses and everything falls apart, or that's a false breakdown. From a technical analysis point of view, when you get the very long wedges, you get, sometimes people refer to them as throw over tops or undercut lows or something, but I tend to use the term false breakdown and false breakout, and I think it's happening at the moment with is it the Fed funds rate one chart, and it tends not to stay down there for too long. It'll plummet, reach a support level somewhere, goodness knows where, and then something happens and it just flies back up again. I mean, it happened with oil. Like you said, oil went to minus $40. It looked like everything was falling apart, and here we are, 18 months later or whatever it is, and it's back up at $70 plus. So I suspect that's a false breakdown. It's an unpleasant looking false breakdown, but yeah.
Jasper, can you do me a favor? And that lower trend line started in July of 2014. Yeah.
January, yes. Yeah.
Started at in July of 2014.
So
instead of where you started it. Yeah.
Move
it there. Yes. I'm just curious to see how that looks.
Okay. Yeah. Sure.
There's a lot more touches, and then but still same. Yeah. Yeah, it's like always, Kevin, like what I've heard from Kevin, it's like a band,
Yeah.
So
zone, you can draw in a support zone using a number of different possible positions for the support line. It's very, very rare actually that you get one single support line and one single resistance line. It's quite common to get a range of possible positions, and each line is valid. It's not that any one of them is right or any one of them is wrong. It's just that each line gives a different amount of support and resistance. I think
somebody asking me
kind of like force fields with different strengths.
Well, this is super tricky, Kevin, because man, I don't know. Like somebody asked me, do we have the Colombian peso there? COP. Do you have access to COP, Kasper? COP. And COP, Colombian peso. I don't know. Doesn't, but it's probably a there you go.
Exactly how to.
I think I saw it. Colombian peso. It was right there. There you
Oh,
go.
this
One of
one. Okay,
these.
yeah. CLP.
So I don't know
Okay.
which one. Maybe the one expressed in US dollar. That one's expressed in. But I'm wondering, Kevin, like Zimbabwe, like that chart. You know these ones that they never come back, right?
Not until they dollarize, I suppose, and link their currency to the US
Or
dollar.
like Lebanon and okay, that one's about to break down also.
Yeah, it is. We're right here, more or less, right? Back in 2019. This is where we are right now, more or less. We have this here. So if you take a fractal of that one, I guess you will see more or less the same, I would say. Do like this. So what you can see here is
Wow.
spot on.
And Jesus. So that could happen also to the USD the lira. Sharp move down, a rebound to rehook up with the descending trend line, right?
Yeah, exactly. You have back to
look at that fractal, Kevin. He's good, Kasper, with the fractals, right? I didn't even see that.
Yeah.
You saw it right away. Jesus.
The way different people's brains are wired, which is why it's really good to look at different people's analysis.
False breakout to the upside, reverse move. Damn, they happen all over again. Those
false breakout and around the apex move down. My friend Grady on Twitter has coined that term, I think. It happens quite a lot. Yeah.
Jesus. So I should be shorting the Colombian pesos now.
Yeah, it looks like it. Yeah.
So. Jesus. Oh man, great stuff, Kasper, man. I'm gonna be snooping on your Twitter feed more often now.
Yeah, please do.
Yeah.
Please do.
Yeah, me too. I'm going to start looking at the fractals as well a little bit more. Some fascinating stuff there. It's definitely around the story around inflation and the dollar index as well, adjusted for inflation. That's something that's going to be really important going forwards in terms of how precious metals and commodities perform.
Yeah, I look at that chart every Friday. I look at that chart to see where it has been, what it has been doing, for the past week.
Yeah.
So it's
well, that's going to be a death knell for gold if ever the DXY is able to outpace inflation. That's going to be, but I think gold's going to price it ahead of time.
Yeah, but also if if the dollar can outpace the inflation, then the world will crumple more or less. Every country around the dollar will just go. Will look like the Turkish lira. So.
Yeah, I mean, real yields are going to be really important to watch as well, because real yields are going to struggle to keep up if inflation is getting away from us. Real yields are likely to keep falling because the yield itself is unlikely to keep up. If yields don't keep up with inflation, the real yield drops, and that is also fuel for the price of gold and kind of by association silver as well, and platinum as well, which we haven't mentioned, which is pretty historically undervalued compared to gold right now.
Yeah, for sure.
So platinum is also something to really keep an eye on. Good stuff. Good stuff.
Want to wrap it up, Kev?
Yeah, I was going to say that is brilliant, Kasper. We really appreciate that. That's Kasper at uselink.inv on Twitter. Go check him out. Check out his Twitter feed and his charts for a different angle, a different way of viewing things as well. Really, really good stuff. Any final thoughts, Pat, from you before we say goodbye?
No. Well, I'm happy to have you on, and we'll try to talk to you again soon. Touch base. If ever you see anything interesting there, just send me a message there, and or me and Kevin, and we'll try to catch up there and do another one of these sessions.
Yeah, sounds good.
Because that was cool fractal work that we don't do often in our chats there, and I love that there that fractal work you're doing there. It helps see a possible roadmap of previous behavior. If it reproduces, then it helps like fix expectations.
Yeah, it does.
Good stuff. Well, this is going to go onto our website for a day or two for our subscribers and our members to take a look at, and then it'll be going public on YouTube in a couple of days' time. So going out to the big wide world. So Good stuff, everybody. Thanks a lot, and we'll catch up with you again soon on NorthstarPatchCharts.com and chatting to more guests in the future. In the meantime, happy holidays, happy festive season, and take care of yourselves. Bye for now.
Bye.
Bye.